Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be breaking down NIO. The stock is well over $40 per share. We're going to be breaking down, is this stock a buy, sell, or hold? So I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button. Hit that like button because it really helps me out and more people can see it. Also, if you guys want to learn more about investing in the stock market, I do have a $5 course really explaining how to properly invest in the stock market. We talk about fundamental analysis, technical analysis, and really everything you need for investing in the stock market. So, hope you guys enjoy it. Roll the intro. Let's go. Now, NIO is the electric car manufacturer based out of China. So a lot of people always ask me, what are my thoughts on this company? And I'll tell you, I do think NIO carries a ton of long-term potential. I do think that people are getting more and more dependable on electric vehicles. And I do like to compare NIO to the Tesla of China. That's kind of how I look at them. I do think that they are a very strong company. They are the front runner in the electric space. And I do think they take up a lot of market share. And really, when you take up a lot of market share, you have a lot of revenue. And that's kind of what NIO has been working on, is increasing their revenue and increasing their deliveries. But we'll get into that here in a second. But let's do some technical analysis here. So looking at this stock here, you guys can see within the past year, the lows are at $1.66 and highs at $43.30. So if you guys would have bought in at the lows and sold at the highs, this would be a return of 2,777%. Definitely outperforming all of the major indexes. But look at this. The stock has had a real beautiful upward trend. Really no signs of stopping it. Yes, there was some, resistance at 21, some resistance here at 16, and some old resistance here at 30. You guys can see it did go up, down, and just consolidate here for a while. Really likes to use these moving average lines as some overall support. So you guys can see it really comes in contact with it, it consolidates, and then we get buying pressure. Comes in contact with it, consolidates, buying pressure. So now it comes in contact with it, and then we did get buying pressure. In this zone here, a lot of people always said, what is going on with NIO? Well, NIO did release a lot of fundamental catalysts. So fundamental catalysts could be a variety of things. Just to imagine it as like news for a stock. It could be news, it could be earnings, it could be anything. Companies getting FDA approval, stuff like that. So NIO did release their earnings and they blew it out of the water. They had record deliveries, they made a ton of money, and that's why a lot of people invested in it, is because of that fundamental catalyst. Now, looking at this stock here, you guys can see almost every single time it's been trading over an 80 on the RSI, we had some sell-off. So looking at it here, let's go all the way back in here. You guys can see, came in contact with it, we had sell-off here. Came in contact with it in here, sell-off. So now it came in contact with it in here again, sell-off, consolidated, and rallied up. So now where do I think a fair value for this stock could be? Well, I do think $35 to about $30 is going to be that new support for this stock. The reason why I say that is because that's when it's going to be hitting those moving average lines. And if it falls all the way back down to 30, that's going to be that old resistance that is that new support for the stock. So that would be my total buy zone, and I would honestly just set my stops if it was going to be a swing trade at around $25. So I would risk $5 per share to make, maybe another 10. So I'd be risking $1 to make 2. So it's a pretty decent ratio, not too bad. I like to have, 5 to 1 or at least 3 to 1. But honestly, I do think NIO carries a lot of potential. So now, what is the best strategy for investing in NIO? Should you try to time it? Should you try to just wait it out? What should you do? I do think that NIO carries a ton of long-term potential. And I do think the best strategy for this is something called dollar cost averaging. So really what you do is you figure out a principal amount. So this is going to be how much you want to invest. So if let's say you want to invest $1,000. Now, instead of investing one lump sum of $1,000 at $41 and crossing your fingers, closing your eyes and saying it's going to go up, what you do is you just invest $1,000, but you're going to spread out that monthly payment. You're going to spread that out over the next couple of weeks. So maybe you invest $100 a week over the next 10 weeks. So you still invest $1,000, but now what this does is it gets good overall average price. So if NIO goes up to maybe $50, you're still in profit. But if it falls back down to 35, now your average price is going to be 42. And then if it falls down to 30, your average price is going to be 35. Now once NIO recovers you're going to have a better average price than investing one lump sum at any price. So I do think this is a better solution for one lump sum investing. And especially with these high volatile growth stocks, you never know when the stock's overvalued. It's very, very hard to time the market. And like Warren Buffett says, it's better to be in the market than out of it. So you just do dollar cost averaging, spread out those monthly payments, and you guys will be fine. I promise you're just going to get a good overall average price. And I do think NIO carries a ton of long-term potential. So, and I understand that it's very hard not to check the day-to-day price, but that's something you're going to have to do. You're going to have to ignore those day-to-day swings, and you're just going to have to relax and let the stock play out. Now, if you guys still want to invest the one lump sum of $1,000, I would not recommend buying at $43 just after earnings. I would recommend waiting for the market to settle down, for the stock to sell off to at least $35 to $32 per share. I do think that is a pretty fair value for this company, and I do think that still carries a lot of potential, and you can definitely make your money back. But I do think dollar cost averaging is a better solution for a lot of people. So that is it though. I hope you guys enjoyed the episode, and if you did, make sure you guys smash that like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and especially right now, stay safe out there. We'll see you tomorrow. Take care. Bye.